You are listening to ChartingWealth.com for Friday the 12th of February, 2016. We always start with IYY. And what do we see going on? Well, we've got our third candle developing a nice trend line with strong down moves after the market peaked around the 4th of February after a huge down move starting on the 4th of January until about the 21st. It moved up a little bit and then rolled back over. We're in strong down moves. The derivative oscillator, which had been in the green, still in the green, but losing a lot of its speed. Of course, the MACD, the moving average convergence divergence, went down again starting on the 8th, continues to diverge from the red signal line on our charts. If you don't know what I'm talking about, you need to sign up for our daily newsletter, which includes, of course, this podcast, video for those of you who want it. You can always get the audio at iTunes. What you'll get when you sign up at chartingwealth.com for our newsletter is we will send you a link to how to read a stock chart, the video that we put out on that issue, which will explain to you what the MACD is, what the derivative oscillator is, what candlesticks are, why we use them. There's also a number of other teaching modules under our videos at the website. So please, by all means, listen to those, pay attention to those, learn from those. Also, you'll also get our charting layout, which is what we're looking at on the video, what I'm explaining to you on the audio right now. So we've got the market in a strong, this is the total market, that's what IYY stands for. It's the iShares Dow Jones US Total Market Index Fund. It is in a strong down move. Now, if we want to look at the intraday chart, what happened during the day, huge down move in the morning, a little bit of an up move in the afternoon. Of course, those of you who are doing your virtual trading or investing, that is where you open up a broker. You go to one of the online brokers, you open up a virtual account so you can practice what it's like to actually trade real money, but you do it virtually with virtual bucks. And you can go in there and you can buy puts if you want in a condition like this, or you could buy the inverse of the total market. We'll also talk about the S&P 500 and the Nasdaq 100, which you can also buy inverse funds in, which is what you would be doing at this point, either buying puts if you wanted to do options and risk everything, or if you just wanted to buy an inverse fund and make money when the market went down, because the inverse fund is inverse, right? Means it goes up. QID is one that I like a lot when I'm looking at the Nasdaq 100, which is my favorite chart to trade. We're looking at the total market right now. It crossed over. It had originally been going up on the short chart during that interlude that I talked about before, when the market started turning up for a few days and then rotated back down again. We want to catch that second move down after the market backs up and then starts moving down again. That started around the 5th of February, and it has been a nice down movement, and in fact accelerated over the course of the day. We don't have a crossover yet on the MACD, and those of you who stayed in that move are doing quite well. When the move first started, somewhere around the $93 to $94 mark, down to $90.50 or so. So the market actually closed at 90.80, so that $90.80, down 1.10%. Now let's go to SPY, which is of course the the S&P 500. And what do we see in that fund? Again, three big down candles. It looks somewhat similar to the IYY, the total market. Why? Because the S&P 500 is 500 big volume companies that represent a lot of the volume in the market. So sometimes it'll be similar, many times it will be, but it's not the same. Three big down candles on the big chart, the 2-day chart. Our 4-hour chart shows lots of down movement in the morning and then a little bit of up movement in the afternoon. Overall, the SPY was down 1.3% for the day, well below the 2-day trend line. Again, those of you who got in are very happy with where things are right now. When I say got into an inverse fund virtually, again, just to make sure, every now and then I'll have people send us questions, queries. They'll post things on Facebook or YouTube or send us emails asking what should they do with their real money. We are not a stock calling service. We're an education firm. We talk about learning to trade, learning to invest, how to read a stock chart. We do not give you advice on what to do with real money ever. Those disclaimers are always there. We want you to practice with us, to learn what you're doing and to feel comfortable. And then and only then do you make your own decisions with your own money. So we're in confirmed down moves on the S&P 500. We're going to now range back out to the 2-day chart. Look at the Qs, which is the Nasdaq 100. And of course, the Qs is in a confirmed down move. 3 big down candles, derivative oscillator rotated over. Not down nearly as much as the other charts, just down 0.14% for the day. If we look at the intraday chart, what do we see? We see on the intraday chart some down movement in the morning and some up movement in the afternoon. We do see a coming together still of the MACD, the moving average convergence divergence, and our derivative oscillator continues to lose downward momentum. So the Qs has continued to sort of hang around even today, somewhere around, when I say today, I'm talking Thursday, around the $96 mark. So be careful. You may have run the course on this down movement. What would you do? Well, you might cash out half your position, take some of those profits, and then maybe let the rest of it ride if that's something you want to do, or take all your money. You did really, really well. If you got in when the market crossed over going down somewhere around the $100 mark up to as high as 102, and it's gone all the way down to around 95 and a half, $96, you have done well in the course of just a few short days. That is a nice return. So again, just keep watching. We've not rotated over. We're still in confirmed down moves. You're still below the 2-day trend line. Confirmed down moves on the big chart and the small chart. No reason you have to get out. But again, just think about, it's always good to take a profit and not get greedy. Think about it. Now, let's go ahead and range back out. We're going to look at our last thing. What is that? Gold. Are you going to believe this? Gold was up 4% for the day. 4%. How many of you folks were in gold based upon our charts? And again, virtual gold rotated over going up around the 14th of December, really slid sideways for a while. We were worried about the accuracy of the MACD. Why? Because the MACD is not good when the market's slipping sideways, but it continued to stay above. The derivative oscillator continued to stay in the positive, in the green, and the MACD continued to stay above the red signal line. And then all of a sudden we started seeing some real up movement around the 5th of January as the market started to crash, the stock market. Then we saw it slide sideways for a couple of days around the 13th and the 15th. Then our acceleration took off again, and this is a massive candle. We have been outside the Bollinger Bands the last 3 candles, that much up movement. The Bollinger Bands are volatility bands. When you have such volatility that your candles are above the Bollinger Bands, you got some real movement. Hopefully you have been seeing that and doing well in it. Now we're going to go from the 2-day chart to the 4-hour chart, the shorter chart. What do we see? Massive movement in the morning, and then it just sort of matched it later in the afternoon. But that chart crossed over back on the 21st, and those of you who paid attention to that jumped in then. You had some sideways movement for a while. Then the market moved up a little bit around the 27th or so of January, and then really started an accelerated climb around the 3rd of February. So we're in confirmed up moves, big up moves on both the 2-day and the 4-hour chart. Hope that you are doing well. Even if you got out when it started slipping sideways, even if you did then, you've done well. If you sold half your position and stayed in over the course of this day, you've done even better. If you had the guts and wanted to take the risk and not lock in that substantial profit you made when the market started running up around the 3rd to the 8th or 9th, and you stayed in through those doldrums on the 10th or so, afternoon of the 9th and the morning of the 10th, if you stayed in through the 11th of February, you are very happy today. Up 4% for the day. Amazing. This is what reading a stock chart is all about. Reading stock charts, paying attention to what the market is telling you, whether it's the stock market or it's the market in a commodity, it's in gold, whatever it might be. You need to learn to read the charts. There is so much power there, not being captive to what you're being told on the news, which many times is misleading or just plain wrong. But when you read the charts, you can many times see just what's going on, and many times portend the future, or at least protect positions and know when you need to get out. That's what it's all about here at chartingwealth.com. Thank you so much for listening. Hope that you have a wonderful weekend. And don't forget, we're going to be recording over the weekend our weekly review and forecast and our daily review for Monday. Thanks so much. God bless. Hope that the market's being good to you and you're paying attention to what it's telling you. Remember, it's all about the charts, not the noise, from chartingwealth.com.